In the monetary policy announced today by the Reserve Bank of India, the repo rate has been left untouched at 4%. What does this mean for you as a borrower and depositor? And what are some of the other announcements that have an impact on your personal finance? RBI kept the rates unchanged. That's really because we've just recently seen inflation moving up. And I think RBI really wants to see inflation moving down before they decide to cut rates further. RBI has been doing a lot of rate cuts since the last 1 year. And if we were to look at the period from January to July alone, you would find that RBI has reduced the rates by 1.15%. But this is not really moved on to the borrowers, and it's not really transmitted to the borrowers for a couple of reasons. Well, one is that borrowers themselves have not been aware that the rates have fallen and that they could ask for a rate change. There, of course, has been a huge reluctance from banks themselves to pass on the rate cuts because it's impacting their profits at the end of the day. And also, if you were to look at MCLR, it only gets reset on a particular interval, so it could be quarterly or half yearly, and hence the transmission has been slow. Even then, compared to the 1.15% cut that has happened, MCLR has reduced by 0.7%, but this is only for the public sector banks. For the private sector banks, it's pretty much remained at 0.4%, which means that the transmission really has not happened in case of the private sector banks. I think borrowers should look at moving their loans into the external benchmark linked rate, which is also known as the repo linked loans, simply because these loans are 0.3 to 0.4% cheaper. And with EBLR, you will see that the resetting happens on a faster basis as compared to the MCLR. Of course, before moving your loan, do keep in mind that there are going to be some transfer charges and you need to be able to negotiate them well. Keep in mind the tenor of the loan and what you're going to save at the end of the day. Get your calculation right. I will be coming out with a video on whether you should actually do a balance transfer or you should convert your loan probably by next week. So do watch out for that video. Well, the rate cuts certainly do not bode well for depositors. We've seen the interest rates falling. I don't know how many of you saw my previous video, which was really on how do you really manage your fixed deposits right now. And we are seeing deposit rates falling. I do expect deposit rates to actually fall further from these levels as well. So while we've seen deposit rates falling by about 1 to 1.5%, and now if you were to see the 1 year fixed deposit rate on most of the nationalized banks is like about 5%. We do see some more pain ahead as far as deposits are concerned. Another announcement that was made in the policy today was the loan to value for a gold loan has been increased from 75% to 90%, which means that on the value of gold that you are pledging, you can now get 90% of that value as a loan. I think it's good for people who are in real trouble and who are using the gold loan facility to really tide over the entire coronavirus crisis. So to that extent, I think that's a good move. The other big move that has happened is that RBI has allowed restructuring of loans like personal loans, I think even auto loans, for example, credit card loans and stuff like that. They have formed a committee that is actually going to devise a system to figure out misusers and to find out who are actually the genuine users of these particular loans, and to offer this facility to pay the loan within the next 2 years. So we'll have to wait and watch the announcements on that piece. But I think from an overall perspective, as far as individuals are concerned, if you are a borrower, do look at trying to get the interest down on your home loan. If you are having a personal loan or a credit card loan, try to take a gold loan instead of those expensive loans. And if you are a depositor, interest rates are falling, they're not going to beat inflation. You should be looking at alternate investments that give you better risk adjusted returns. Make sure to click the bell icon to subscribe. Do watch out for our regular updates. Cheers.